All right, so we're gonna go through setups today and entry models and confirmation, when to stay away from a trade and when to get into a trade. Okay, let me go through the slides real quick. And these setups are very specific. Okay, so and some of you are probably familiar with a couple of them. They're classic setups, but we'll just go through it here. Okay. All right, so it's advanced SNR and S&D. It's basically support and resistance, but there's certain criteria that needs to be applied. Okay, and I'm gonna show you guys like examples. So SNR type 1 is where you're going to have this strong push, retracement, and then another push at this resistance. Okay, so as you see, we have a resistance line here. When price comes up, we're going to have a rally-based rally in the same line of this high. Okay, so we need to see a basing candle here, or an OB or demand, whatever you want to call it. It needs to have that in the same area. Okay, it can't be above it, can't be below it. It needs to be on the same line. Okay, that is your entry. So as price is moving up, you'll get your RBR. Price moves up, making a new high. Price comes back down at that area, and that is your entry criteria. Okay, this is SNR type 1. SNR type 2 is basically the same. It's the same instance, except instead you get a drop-based rally, and your entry criteria is from this resistance point. So from right here, you're going to draw a line right across, and that's your new entry point. Okay, so it's different. It's not a basing candle here. Right here, we just have a rally breaking through the resistance, a drop-based rally here. So if you don't know what a drop-based rally is, it's a drop, a base, and then a rally. Okay, sorry, I didn't know you guys couldn't see my mouse. So right here, you have a resistance, drop, resistance, rally, base drop, drop, base rally, right? So it needs to, this is your entry point right here. This needs to break through this resistance, drop base rally up, make a new high, and then come back down right there. Okay. As you can see, we have 1, 2, 3 taps here. So 1, 2, 3, boom. That's your entry criteria. Now it doesn't always have to have this trend line. Okay, the trend line from the bottom. That's just giving you direction. Okay, so if you struggle, yeah, for sure. But let me just go over this one. So if you struggle with direction, you just, okay, and then now you know you have direction, right? You're expecting something on the third tap coming from here, okay? So as price breaks through the resistance, drop base rally, comes back to the entry point. On this one, okay, oops. Let me clear this. On this one, if, for example, we had extended this a little bit here, okay, something like that, that would be your trend line. We have the strong resistance and then a rally-based rally. So it's going to be basically an order block or demand candle, whatever you want to call it, a basing candle right at the resistance. So you have the resistance in the same line as your basing candle. Okay, so you'll have a basing candle. So this would be all up candles, down candle, up candles. Okay, entry point, third tap, or at strong resistance. Again, you don't always need a trend line. That's just going to help you with direction. Okay, this is called the QMI. It's just inducement. QM, we're heavily into QMs, but we have specific criteria for our QMs. Okay, so for this QM, right, we have a high, a low, higher high, lower low. What we see here is this SNR level, right? We have support turned resistance. This is an SNR flip, okay? So what are traders looking for is to short this here. But instead, we take it from the QM level, okay? So we wait for this to get taken out right here, and then we wait for price to come back up to our entry point, okay? Our entry point is here on the left shoulder. So we have a left shoulder, right shoulder completing it. We need to make sure that this shoulder, this low is broken through. Then if we have an SNR level, we're not going to just take the short here, okay? We need to get that inducement, QM inducement. Okay, so X factor or QMC, it'll just help you remember. It's just like an X. So what we have is a 3-point touch. So first we have this first drive to the high, drop. Then we have a lower high getting wiped out, right? So we have a new QM being built on this trend line. This is what a QMX looks like, or a QMC or an X factor looks like. We have left shoulder, right shoulder entry. Okay, so you have price pushing, dropping, pushing, dropping, pushing higher, dropping, high, low, higher high, lower low. Price hits our QM level, 1, 2, 3 taps. Okay. Here we have our QM fake out. So if your QM fails, so if you're in the, if you're worried about QMs failing, it's usually going to be, if it's a bearish QM like this, you're usually going to see this at the bottom of a range, right? So if you're at the lows of a range and you see a QM being built, be wary and think that there's a possibility that it's just going to break through this high, because now we're at levels where buyers can come into the market and push price, okay? Or algos, whatever you want to think it is, it doesn't matter, okay? We have a high, a low, higher high, lower low. Price creates a basing candle at this left shoulder, okay? So instead of dropping, it just, you see this basing candle. So if you were planning to short this, okay, and you fucked up, then look out for this, okay? If there's a basing candle on this left shoulder, wait for price to take this high, come back down and bounce off this left shoulder with our entry point, which is going to be a base, okay? So OB, demand candle, whatever you want to call it, okay? So this would be your fake out. Okay, here's a QM wedge. So basically what we're seeing is we were probably able to sell some of this here. Okay, and then now we're probably tapping out at the end of the range. We see a pattern forming and then a breakout above this high, creating a QM, a low, a high, a lower low, a higher high, entry point here on the left shoulder. Okay, so the price is breaking through this. This all now is valid liquidity, okay, because we're done with the move. We've broken out of the structure, we've come back, retraced to the left shoulder, price moves aggressively, back down, entry, okay. Now I'm going to share my screen. Making sense so far?
So when trying to identify a schematic, do you have to use line chart or can you use candlesticks as well?
I use both, so I'll go over that. So typically, let's just look at where's gold. Okay, so if we look back here, there's certain things that need to happen. So if we want to look for QMs, right? So there's two ways to go about this. If you're looking for QMs, you can go from, or setups, I mean, in general, you can go from higher time frame to lower time frame, or lower time frame to higher time frame. Okay, this is all a matter of preference, whatever you want, whatever is more comfortable for you. So what you can do is search on the higher time frame. You know, I should go over confirmations first before I go over this. So for example, if I have a QM, right? Like if I have my QM like this, and I'm waiting for this left shoulder, okay? What I need to see on a higher time frame, so let's say this is M15. What I need to see on a higher time frame is I need to see an engulfing. Okay, that's my higher time frame confirmation. So if I'm on M15, I need to see an H1, H4 daily engulfing pattern. Okay, so let me change this to red. So when you're looking at price, right? Like when you're looking at taking a trade, you need to see this engulfing pattern on the higher time frame. This is giving us context of what's in the candles, right? So we need to see what's in that quote unquote bearish order block or supply and demand candle, okay? So we see price moving and dropping, right? And then on the higher time frame, this is the pattern that you need to be seeing, is this engulfing pattern. When we see the engulfing pattern on the higher time frame, that's confirming the price direction, okay? And we can enter. I don't need it to break structure or anything. I just need to see that this is engulfed, okay, on the higher time frame. As long as this is engulfed and I'm with the higher time frame and market structure is showing me bearishness, I'm going to take this trade, okay? I'm not going to question it. I'm not going to think about it. I'm just going to take this trade. This is going to be in like this, for example, this red line is, for example, going to be like M5, M15 on those higher time frames. The lower my time frames, so let's say it's M5, then I can go down to M30, H1, H4 for my confirmation. If it's M15, I'm going to H1, H4 daily. It's M30, I'm going to H4 daily, weekly. Okay, so I need to see these higher time frames engulfing for me to validate my trade. Okay, so like I said, you can go backwards from higher time frame to lower time frame. So I can look on the higher time frames for engulfing patterns, then zoom in on the lower time frames and to see if there's a pattern that's forming inside that engulfing. The body, okay, the body. Lower time frame to higher time frame would be me hunting for setups on M15 and then confirming them on the higher time frame. Okay, so it's just backwards. So depending on your preference, whatever you want to do, if you're looking at lower time frame to higher time frame, then you're just going to be hunting for the setup models. Okay, and then you're going to be looking for those engulfing patterns, or you're going to find the engulfing patterns first, and then you're going to go down to lower time frames to find the pattern. Okay.
I wanted to ask, on GU at the moment, do you think on the 5 minute is doing the same pattern as you just spoke about now? Just something that I noticed.
I don't really see any pattern. There's no pattern. There's no call. This would need to make a high up here.
Yeah, I think if it runs, I was looking at if it runs a little bit higher to 1.36150. It sort of does like a high, low, higher, high.
So we got to get into the next criteria for it because not every single one is going to play out like that, but you'll get it right now. So for example, if we're trending, okay, all this is valid, right? To take buys, right? All this is all valid to take buys. But once we hit the beginning of the trend, so if we're hitting the beginning of the trend, this all becomes invalid, okay? So anytime the trend starts, that point where the trend starts, the trades will become invalid. If we're taking sells, all it's valid. But if price comes up and taps the beginning of the trend, it's invalid. Okay, so we need to be aware of all the trends. Now, let's say price is doing this. Okay, this is the origin of the trend. And then price breaks down, right? does a QM, your QMs are still valid until it hits the beginning of the trend. So if it hits the beginning of the trend, it's invalid. If you're buying and it hits the beginning of the trend, it's invalid. Wait for the trend to resume. Okay, so after this trend is broken, is tapped into here, more often than not, after it grabs all that liquidity below, it's going to retrace and then give a new direction, right? So if it starts breaking down again, then we could look for sells along the way even more and look for the higher time frame trend. Okay. Yeah, guys, let's just focus on the setups right now.
He's showing you the setup, the patterns. So let's just, yeah, try to understand the patterns now.
Okay, now let's say price is now resuming an uptrend. When is my uptrend invalid? When it touches the beginning of this downtrend. Okay. So we need to be aware of where we're at in these trends. Okay, so new trends are always forming. And if you're in the new trend, you can keep taking buys depending on your type of style. If you were taking a buy here or something for some reason down here, you would be targeting this high. If you were taking a buy here, you'd be targeting this high. Okay, and along the way, you're taking profits at the highs and then getting. So you're, instead of holding all the trades through, you can hold all the trades, right, up until whatever red zone is over to the left that will invalidate this trend. Okay, but for me personally, I like to just TP logically. So as price is moving up, I'm taking profit. It's moving up, I'm taking profit. As it's moving up, I'm taking profit. That way, I'm not risking all my like if I got my low down here and then for some reason price just wants to come and take me out, instead of not securing profits, I've secured profits along the way, and I'm just buying back the pullbacks basically. Okay. So you just need to be very wary of that. Now these things can feed into each other as well. Okay, so for example, let's say I have a some sort of QM pattern like, or SNR1 pattern like this. Price comes back to that base and then rallies, right? And let's say price does something like this. Okay, they can feed into each other, right? So right here, I have my first entry. Okay, right here, I have my next entry, which is your QMX. Okay, and this is how I can stack positions because I'm seeing setups within setups or setups on setups. Okay, so here we have that SNR1, and then from here we have QM pattern, low, high, high, low, higher, high, lower, low. Price comes up, drops here. Okay, when it comes to the X factor, you have to understand that in your trend line, okay, when we see that peak form, that first peak, okay, we have to look on, like, so if we find this setup where this part hasn't happened yet, we're waiting for that left shoulder to complete right here. When we see this happening, we need to look on the higher time frame again to confirm this trade. What the heck happened? To confirm this trade. So we need to see an engulfing pattern. Okay, in the middle. Okay, so in the middle of the trend, right? So we have that first high being made, then we have that second high being made. We see an engulfing pattern in the middle of the trend, and we see our QM setup on the lower time frame. We can hit that right here at the QM level, SL right above here, and then have that continuation move. So when it comes to these two trades right here, or the SNR1, SNR2, QMX, these are continuation trades. Okay, they're continuation trades. They're not reversals. Okay, so you should be looking for these in a continuation of a trend. The other one's just a regular QM. This regular QM without any type of trendline confluence is just a reversal pattern. So if we see this starting to happen at the top of a range, we should expect a reversal when we see this type of pattern playing out. Okay, when we see the QM wedge, we should expect a reversal. This should be happening at the bottom of a range. Okay, so these are reversal plays. Now remember, reversal plays are going to be lower probability. Okay, it's like stopping a moving train. Okay, so you have to give price time to develop. A good way to save your ass from taking a lot of losses is if you see a big drop in price like this, and then you just for some reason decided to take a buy from the left from some random POI after you see a huge move down. Okay, that's showing intention. Okay, and you're trying to catch this low, and then you see price doing this, you're more often than not just going to get wiped out. Okay, you need to give it time before this reversal will happen. You need to give it time to form your setups. Okay. You have to give it time. And more often than not, when you do get this type of drop, so when you get a drop in the market like this, and the price starts trading sideways, more often than not, you're going to get another short. Okay, if we look at EU, for example, okay, we have a huge decline, price moves sideways, decline. Look at NAS. You get a huge drop, price moves sideways, drop. Okay. So just understand that once you get these huge declines, you're not gonna, like, you know how many people are trying to catch the bounce right here, right? They're trying to catch this bounce, they get fucked. Try to catch this bounce, they think they're in, they get fucked. Okay, so once you see these huge declines, just understand that it's most likely going to decline again. And in these declines, if it is going to break out, you want to see these lower highs being built like this, and then it ran through, and then retracement, then run. Okay, so that's how you can kind of confirm whether your direction is going to be right. But even then, you should, like, if this pattern is going to be like a low probability pattern, I would, like, you can still take this. I rarely play this, but I have done this in the past a few times. But I rarely take this setup, right? I rather wait for like if I see this setup and then I see a QMC or a QMX X factor after this, then I'm for sure gonna take it. Okay. No, this is a QM wedge. Okay, let's go back. What? Oh, this? Yeah, this is a QM. So low, high, lower, low, higher, high, price returns, QM level, and it's moving. I was actually going to take this buy, but we started the Zoom bootcamp, so it's all good. Okay, let's go back into our charts here. Let me go on the hourly, actually. Okay, so basically, so your trend lines, we can draw them from a line chart to make it clear. Okay, I think this is from H4 actually. Yeah. So I had this H4 trend line here, right? We have these coming out and then breaking through. Go back to the candles. Okay, so it's basically, it's not, there's no perfect technique to draw these trend lines. Okay, you just need to see the trend. It's just giving you direction. Okay, so it's just telling you, like, we're obviously making lower highs here, and then we're breaking through that. Okay, and then we have a QM level here, price returns to it. Okay, so these type of movements during a consolidation market, like where we're trading sideways, So it's my favorite because you can find a lot of setups in this, okay? And you're just targeting, 30 to 50 pips, and you're compounding your account really quickly. And that's what I like. Right now, the market's been just trending so hard in both directions that it's not good for compounding. It's just good for setups. Okay, so anyways, we have the QM wedge here, price breaks out, returns, and then you get a movement to the upside. Okay, what do we have here is a QM, right? High, low, higher, high, lower, low. Price moves into our QM level and then drops. Okay, so you have those setups, right? We can look at how our trend's constantly changing, right? We have this downtrend, now switching to an uptrend, okay? This has basically two setups in one, where we have our QM, low, high, lower, low, higher, high, price returns to our QM level. When we see setups within setups, it's a really good sign. On the, I believe on the lower time frame here was a SNR1, I think, let me check.
Everybody understands the difference between SNR1 and SNR2, right?
Yeah, this was actually SNR2. Okay, because remember the basing candle needs to be in the same line as the resistance. So this is SNR2 where we break through the resistance, we have a rally, right? So in this case, we would need this basing candle here to be here, okay, for this trade. But instead we get that rally, base, drop, drop, base, rally. Okay, so our entry point is from here. Plus we have QM, so it's a very strong area when we have those two confluences at the same time. Okay, so that was a reason for a buy at this level. Okay, as you can see, we should be marking out where our trends are or channels. Okay, it doesn't matter. We just need to understand the direction of price. Price is making higher highs and higher lows, and then it breaks that. Okay. So in this case, because of the trend change, we should be looking for short somewhere up here, but I don't really see a setup, so there was none taken here. Okay. Let me go to bar replay mode. Okay, as you can see over here, we have a high, low, higher high, lower low, price returns. Right here, you get a drop from there. Okay. Low, high, lower low, higher high, price comes back to QM level and rallies. High, low, higher high, lower low, price comes back, drops. Okay. What are we doing? We're identifying the trend still. Let me take off this replay. Okay, so from here we had a, this was an M30 play. There was an M30, whatchamacallit, basing candle here, or supply candle here. So in M30, there was that, and then on M5, you had a QM setup. Price moved up here on news. This is one that I signaled to the group and then dropped 100 pips. Okay. We can see this trend here and then the trend breaking as price comes back up to the QM level, right? We haven't touched the start of the trend yet. So this is why this was still valid. This is the start of the trend. We haven't touched it yet. Price moves back up and then comes back down. Okay, so we have the start of a new trend, right? We're starting this new trend. We have a QM level here. This is your low, high, lower low, higher high, price returns and rallies. This is more like your QMX. Okay, here, down here, we had a rally based rally on lower time frame from here. Basing candle in the same line, rally, base rally, price returns. here. Okay. There was a setup in here. I'm not sure what it was. I think it was maybe an M15. High, low, higher, high, lower, low. Okay, boom. You have to understand how these candles are built. Where's the other setup I wanted to go over? This was a setup that swerved us this week. I wanted to take a sell from here. It barely missed it, and then it just kept dropping after that. Okay. I'll show you some more examples. Let me go back to my H4. Let's look at another pair. USD JPY. Where is that at? Okay, so here you can see just this thing has been respecting this trend line like crazy. You have these cells from the top coming in. We have right here is a SNR2, right? So we have strong resistance, price breaks down, drop base rally, rally base drop, entry point from the resistance, the original resistance, which was right here, or support, sorry. Price comes back in, taps into it with confluence of the trend line. Trend line's respected. Then price drops aggressively from here. Okay. It's very simple. Once you master these, and you'll be able to see them all over the place. Okay. Now, an easy way to do this is just using your line chart, right? So the line chart will clear things up for you, but you still need to confirm the action on the line chart. So for example, you have a QM level here, right? Low, high, lower, low, higher, high. Obviously, price hasn't come back to it. We have this level here, right? This would be a QM level. And we just need to look on this time frame here and see where it is. We have an engulfing pattern here, but we need to find out how we can shrink this stop loss. So for me, if I was looking for an H1 setup, I'd be looking at this, okay? Right here, I'd be looking at H1, cool, I have a setup, then I'd be turning to H4, I have my engulfing pattern, okay? This looks like a probably good area to start a buy from, okay? As long as we're not tapping into the top of our trend up here. Okay, let's look at GJ. Okay, so on GJ, we have this QM level here. Okay, QM, right? High, low, higher, high, lower, low. Price comes into it here. Okay, when we have like bases like this in the same line, it's a very good sign to take shorts from. Okay, so we need to see these basing candles. These basing candles are really important when they're in line with support and resistance. Okay, so we can see price has a basing candle here, drops, comes back up. If we look on our higher time frame, does price have an engulfing? Okay. Yes, it does, right here. We engulf the body of this candle here. Okay. Price comes back up, taps into it here, drops. Okay, same setup here, right? We have a high, a low, higher high, lower low, okay? We can look for our engulfing. Let me just remove this. Okay, do we have an engulfing pattern? Yes, we do, right here. This engulfed this high, price comes back up, taps into it, and then drops. Okay. What do we have here? SNR 2. Okay, there's resistance, drop base rally, rally base drop, price comes down, and then it returns to the entry point here. Okay, very easy trade. Okay, so if we look at this trade, right, and we're like trying to figure out, do we want to confirm this trade? Is there confirmation here? Just go to your higher time frame. Sorry, go back down to M15 real quick. Okay, so this is our SNR level. Price comes in, dropped, right, and then we can confirm this. Oops, on 1 hour. We have an engulfing pattern. We need to see these engulfings. Okay, so here we can see we have another SNR level right here. Okay, drop, base, drop. So we have setup. We have a setup. Engulfing. Okay, on this, we have a QM, low, high, lower, low, higher, high, price comes back down, taps into it. We have a breakout here of this minor trend, right? So trend's breaking out, and we have 1, 2, 3 taps, okay, on this. So this is AQMX, right? So we have the X factor trade. Here on this line, we have the QM fake out, right? So we're expecting to sell this. It doesn't happen. We have the rally base, right? This is all basing right here. Price moves up past this high, comes back down, and your entry here, you suffer through a little bit of drawdown, and then price rallies. Okay, low, high, lower, low, higher, high, price comes back down, entry point, and rally. Same thing here, low, high, lower, low, higher, high. We form a base at the same level of our QM. Price moves back down into it here. Okay, 1, 2, 3 taps, okay, for your continuation. Okay, so we reached up into some form of supply up here, right? So we have some sort of supply to the left, and price is just breaking through the trend now, right? So we're still taking the setups as it's playing out, but right here we have that supply. So this becomes, now that we've tapped into it, this becomes invalid. And that's why you don't have this QM level working out anymore, okay? Then we have lower highs being built. We have SNR2 right here, where we have strong resistance, rally base drop, price returns into that right there, and then drops, okay? In line with the confluence, 1, 2, 3 taps, okay? I as well was waiting for this QMX to happen, or QMC, whatever you want to call it. It's just the QM continuation. I have my first peak. I have my lower high here being ran, forming the third tap. I was waiting for price to reach here. Fortunately, it did not. It ended up dropping, trading sideways, and I got an entry down here. Okay, I had an engulfing pattern here, price returning to it and then dropping. If it's a reversal, yeah. What else do we have? I think we did that. GBP, JPY. Did we already look at GBP? Yeah, we already looked at this one. Okay, so just know that it's going to take a bit for you. Continuations don't need to be a boss. I mean, it's naturally going to have a boss in it because you need to make that higher high. You know, but a lot of people get confused because you can have H4 wick above, but then on H1 it'll be a break above. Okay, so I'm just using my relevant time frame. I don't care about that. But if I'm on if I'm trying to play a reversal, I absolutely want to see a candle closure above on the higher time frames. Okay, so these are the entry criterias, right? These are the only setups that we play, and that's it. There's nothing else that we take. We know exactly what we're looking for to catch these trades, okay? These are really good setups, okay? This, you know, if there is no roadblocks below, and what a roadblock is basically setups below. So if we see bullish setups below here, after this comes in, we take the sell, we need to be hunting for the bullish setups in the opposing direction. Those are going to be roadblocks that are going to bounce price or may even fly after that. That's why it's always good to secure your profits at these lows. Okay, so instead of like trying to capture it, you can leave positions on, obviously, however you want to manage it. But you can take profits at the lows, right? Maybe take profit here, take profit here. But if there is no other setups in here, right, then you can easily just target this low. Okay. After this, I'm waiting for price to form new price action after I get the low of my trend. Okay. So we just want to make sure that the opposing directions, we can take hedges there, right? If you wanted to hold down here, you could take hedges. Okay, another thing to point is when we use this, okay, when we use our setup models, we can time them, right, for higher probability. Like for example, see if these are timings. Okay, this one obviously happened in Asian session, and then you get some sort of pullback on the lower time frame. So if your stop loss is too big, right, the only time that I use lower time frame confirmation is if my SL is going to be too big. Okay, so if my SL is going to be way too big, then I'm just going to use my lower time frame to find the same pattern at my level. So at my level, once price taps into this level here, I'm going to be looking for that lower time frame pattern to get my entries sharper. Okay, I don't always have to do it. Sometimes I'll just take it from here, and then I'll have my stop possibly above this left shoulder. Okay, because when does this pattern become invalidated? Right, is when it becomes, when it's not a pattern anymore. Okay, so if we like break this high or whatever, it's not going to be a pattern. And I'd rather cut loss. Typically, what I like to see is if price is coming into my level, depending on my time frame. Okay, so if I'm on M15, then, you know, I want to see, I'll give it, you know, maybe an hour to 2 hours for it to play out. If I don't see it playing out at that and it's just struggling, I'm just going to let it be. Okay, like I'll just exit the trade, because for me, like trading is about making money, but it's also about keeping it. Even if this just runs, like I'm not going to be mad about it because I'll find another entry, or I'll find a different position to take, a different stance to take. Okay, so for me personally, sometimes I'll enter it just off the QM level if I have my confirmation. If I understand that price is very weak at the top of the range, we're most likely going to drop here. We're forming these, like the market's giving you the direction now, right? It's like showing you its hand. It's like, hey, we want to go down. Okay, so when you enter here like this, you get that down price action. Do you look at Dixie for the setups to occur as well? No, I don't. I haven't looked at Dixie in a long time. Okay, here, entry, drop. You can wait for lower time frame, or you don't have to. You can play the continuation setups. If you miss the trade, you know how to get into it. Okay, but what you guys are going to need to do is go in when you guys get your PDFs. Is you're going to have to go into the charts and literally sit there and screenshot each setup 100 times. You need to get it in your brain. Like it needs to. The pattern recognition needs to be there. Okay, so let's say, for example, we use our line chart, right? And we see our QMs, okay? But let's say, for example, this had a wick above it like this, like that, right? And we go back to our candlesticks. Okay, let's make this higher. Okay, and this invalidates it for me because it needs to make this higher high. Okay, so if there's a wick, that's why you need, if you're going to be using the line chart, you need to flip back and forth to make sure that this is an actual QM. Okay, the line chart is going to help you see a lot more QMs. It's gonna show you like a ton of them. Okay, like here. Okay, but then if we switch back, boom, now you have your entry. Like what you couldn't see before, you can see it here now. Okay. Let's see. Yeah, you're gonna need to like don't back test like that. You needed to just screenshot the patterns first, and then you can start back testing, and then it's forward testing. Okay, so forward testing. So when I say the screenshots, like I really mean 100 screenshots, and then after when you're going into replay mode, it needs to be before and afters, and that's going to be around 20 to 50 before and afters. So what you'll do is before the pattern happens, then after the pattern happens, then you have, and I do this with all my students. Okay, so basically you have a before and after spreadsheet. It's going to show you the pair before and after. So you take the screenshot before the setup, and then why you took the setup, and what was your confirmation, what time frame was that confirmation on, and what direction was the market heading in at that time. And then you're going to post the after. So what happened after that happened. Okay, and that's going to get your brain trained to see the patterns and see how they play out. Okay.
You need to make it like so it's close to being a reflex. When you go on the chart, you instantly see it. Like you don't want to analyze the charts for half an hour. You know, if you see it, you should see the patterns in matter of 2 minutes, 3 minutes, 5 minutes. But you shouldn't stay on the chart for half an hour, 1 hour, 2 hours looking for a setup.
Right. Hold on one second. I'm going to bring out our compounding plan. Okay, so I'm going to show you guys our NASDAQ compounding plan. And then there's also a Forex one in the chat. So just go under files and you'll find it. I'm just going to show you guys.
Do you understand where's the stop loss or where we cut it when we do see a setup, right? Everybody understands that. I hope they do.
Okay, so this is basically the compounding plan. So let's say you're starting with a $200 balance. Okay, this is for NASDAQ only. If a QM turns into a fake QM pattern, then you just take the left shoulder as bullish, right? So it's a fake QM pattern. It's like when it fails, you're looking for that basing candle here, and then your entry. Okay, on that left shoulder. Okay, so anyways, the 4D NAS compounding, this is just for NASDAQ, okay? So if you're trading the indexes, this is what I use as a plan. Once you trade with a plan, everything becomes so much easier because it takes off a lot of the stress of like, when do I TP? Should I TP here? Should I not? If you just follow this plan and you want to compound quickly, in 16 trades, you could end up with 120K. Okay. So basically, hold on, guys. After I'm done with the lesson, then ask your questions, because now I'm going to, go back and forth. But I'll answer all the questions at the end. Okay. So for example, on trade one, you get in your trade, whatever. It tells you exactly how many lots to take, how big your SL should be, and what your profit target should be, and what your risk is. Okay. When you hit trade one, you go to trade two, right? Trade two is telling you your lots. You go to trade three. Trade three is telling you your lots. You get to trade four. Now, let's say you fail trade four, you just go back to trade three. Okay. And you start from trade 3, 0.04, till you get to trade 4. Your goal is to work down the spreadsheet. Okay. As far as you want to take it, that's completely up to you. But this is a really solid compounding strategy right here. So it builds your account very quickly with high probability setups. Okay, so when you have that really high probability setups, you're not really looking for much. Okay, these are all 50 pip moves. Okay, that's it, just 50 pips. You don't need a lot. Okay, your SL, right, is 25 pip max. That doesn't mean every trade is going to be a 25 pip SL. That just means max SL should be 25 pips. If the 25 pips ticks points, yeah, same thing. So 25 pips, SL, points, whatever. You're not always going to have a 25 pip SL, but it's allowing you to have a 25 pip SL. That doesn't mean on the setup, well, I have room for 25 pips, so I might as well hold it. That's not what it means. So for example, if I have my QM like this, price comes back up to it like this, right? This right here could be, let's say, like 6-7 pips. From the distance from your entry to the top could be, that's for futures. Okay, this is going to be CFDs. Futures, it's going to be different. Okay, so and depending on what type of futures, E-minis or whatever. From here, right, you could have 8 pips. That doesn't mean hold it for 25 to hope that the trade's going to go right, because at this point, it's not a pattern anymore. Okay, it's not. So you should be cutting your loss at that. Makes sense? So just because you're allowed to have that 25 pip SL, don't just have it just to have it. Just cut your loss when the pattern starts invalidating. Okay, so then over the period of these trades, you'll be able to really compound fairly quickly. So just get through the spreadsheet, right? And you can challenge yourself. It doesn't, if you have even a lower balance, because it's pretty much going to be for every $100, you're going to be able to take a 0.01 lot size with NAS. So, with Forex, you can start with a lower balance, like 50, $100, whatever, right? So with our Forex one, we have one with the $100 balance and taking it to 130K. So but that's in 30 trades. Okay, so NASDAQ is obviously, it pays, so it's going to be a lot quicker. But NASDAQ is also a lot more volatile. So keep that in mind, that you could get chopped up in NASDAQ fairly easily if you're not managing the risk properly. And if you're not sitting there being patient for the setup. It doesn't matter how long this takes. Okay, this can happen in a 3-day period, or it can happen in a 30-day period, a 60-day period. As long as you get through the spreadsheet, okay, you should be fine. Using the setups, using the timings, using the confluence principles, okay? This should all be fairly easy for you if you're good at following directions. I recommend using one setup. Okay, one setup that you know very, very well. So when it comes to the forward testing part of it, you need to, so after you're done doing your before and afters, okay, once you label the setups as well, so you got to label, okay, this was a QMC, this is a QM, this was a QM fake out, this was an SNR1, this was an SNR2. After you get your 20 to 50 screenshots of your after pictures, okay, look at the ones that you're doing best with. Look at the ones that are most consistently happening within that pair, right? So whatever pair you're trading, gold, NAS, Forex, whatever you're looking at, you have to understand that each pair has different characteristics. One may offer more setups in the QMs. One may offer more setups in SNR1s. One may offer more setups in continuation plays, okay? And then identify which pattern that syncs well with you that over your screenshots, which is basically your forward test, right? So your forward test, like, hey, I'm entering here. Why am I entering here? Blah, blah, blah. Did this trade work out? No, it didn't. Okay. Then you label that. And then you'll, over time, over those 20 to 50 screenshots of forward testing, you'll see your data. You'll see, okay, dang, like QMIs or QMCs are like my best setup. So I'm just going to stick to that setup for my compounding. Okay. Ivan, do you want to go over the indicator?
Yeah.
Okay.
All right.
Do you want me to show the PDF, or do you want to just
Let me go on TradingView.
Okay.
See.
Okay.
All right. Can I share it?
Yeah.
Just a second. Let me see if everything's all right. All right. There you go. Everyone can see it. Yeah. You should be able to see it. All right. So the 4D indicator is right here. Let me drag it. Everybody can see that. So the 4D indicator has, the way we use 4D indicator, it's basically a mix of different RSIs, 3 different RSIs, a momentum line, and moving average plus volume. So volume in RSI. It's different than the normal, like normal RSI, much different than that. It shows you much more stuff in detail, and it's also a volume RSI, not the normal RSI. For example, let me find you RSI divergence, just a second. Let me see where we got it, not here. Maybe no, not here. Just a second, guys, I need to find it. All right, okay. So basically, the way it works is, let me annotate. So you can see the volume RSI here, as it is here, and it's showing you, of course, divergence. Divergence here, divergence here. But the RSI, the normal RSI, people usually use 14 RSI or 21, I believe, RSI, and 34. Those are the normal RSI levels. We don't use those levels. We use much different levels, higher levels and one lower level. And these levels are, the normal RSIs will not show you divergence. The RSI here will not show you divergence as volume RSI. It's much more easier and cleaner and precise. It's definitely more precise than the normal RSI. This one doesn't really show you divergence. This one does. The second thing the indicator is showing us is so-called squeeze. So the way squeeze works is, let me go on a lower time frame to show you easier. Let me find you squeeze there. Let me just find you more squeeze. Okay, yeah, this should be right. So the way squeeze works is, squeeze is basically separation of momentum line and RSI line. Okay, when you see the indicator separating these two lines, and when they are bouncing off each other, that means that price is being rejected. For example, you can see rejections in price here. So we got rejections in price here. We got load of rejections in price here. We got rejections in price here. We got definitely rejections in price here. Sorry, here. And we got rejections in price here. To be more precise, I can annotate clearly, but you can see price is rejecting this area here. So we got so-called squeeze. Squeeze is basically, like I said, price is rejecting, sorry, something like this. Price is rejecting RS, the momentum is rejecting the RSI line. When you see those two things happening, that's our so-called squeeze. Okay, squeeze is here. We got loads of squeeze examples here. We got close to squeeze being here. We got squeeze here, but this is Asia session. So you see price is rejecting, so it's gonna bounce off it. We got squeeze happening here and here. That means price is gonna go down, even if this was narrow range day. But you see, whenever you see squeeze happening, whenever you see squeeze happening, price is rejecting it. It's gonna give you a reversal. It's a clear sign of reversals, very clear sign of reversals. I'll try to do it like this, okay? So you see price is basically rejecting it. If price is rejecting it, of course, it's gonna go the other way, yeah? The way we use squeeze, mostly me personally, I use squeeze as continuation entries. There's another squeeze here. If you go on a lower time frame, see it on a higher time frame, this is definitely a good entry. But I would use it as continuation entries. So somewhere around here. So somewhere around here, I would probably look for my entry or my setups based on whatever you want to base it off, okay? Okay, so squeeze is rejecting the price. If you see squeeze, price is being rejected. Let me show you a few more examples and clear this out. A few more examples. These are good examples here. Price is rejecting, the momentum line is rejecting RSIs. 2 times, you have 2 tabs, 2 rejections. You can definitely take this buy during New York momentum box, yeah? Price is rejecting it. Price is rejecting it during London close to London close, okay? Price is rejecting it even here. On a lower time frame, you can see this much clearer, but we are on 15 minutes now. But even on 15 minutes, you understand that when price is creating squeeze, price will reject it, okay? Price is rejecting it here. You can see it everywhere. For a compounding account, if you see squeeze, it's a good indication that you could probably take a continuation buy or sell, okay? It's most accurate when it's showing you continuation entries, because if price is going into in uptrend, I don't know why it's not loading this area, just a second. If it's going in an uptrend, if you see a squeeze, you can most definitely take that as continuation entry, okay? You can take all of these continuation entries here, continuation entries here, continuation entries here, okay? If you missed the real setup, definitely a good squeeze. Most definitely a good squeeze during Asia session, unfortunately, but it's showing you rejection of price, momentum line, and RSI are dividing. That means they are gonna reject this area here, okay? Another rejection during London momentum box, price taking out Frankfurt session over here, bouncing off Asia midline, and then you have squeeze showing off on indicator. This is your entry, okay? If you want to take it based on this, of course, there are a few more other confirmations, but just based on this, you can see price rejecting it. The price is rejecting these levels, and it's showing on the indicator, you can take it. Price, again, tapping and bouncing off. Tapping and bouncing off means that this is a good sign of rejection. Tapping and bouncing off, good signs of rejections. These are all signs of squeeze, and this is something you can take. Let me just see where they go to the opposite. So squeeze when it touches the thin line. Yeah, basically, yeah. So when this momentum line here is rejecting this line here, that's a sign of squeeze. They need to tap into each other and then bounce off. Okay, that's very important. They need to tap into each other and bounce off. Okay, that's something this indicator can easily show us, so we can take continuation trades. Let me see. Let me go on a higher time frame, 1 hour time frame. Okay, if you don't see it, you can of course make it bigger, just make it pretty. But whenever you see rejections like this, squeezes like this, you can look for your entries. If you see squeeze like this, you can look for your entry. Okay. If you see squeeze, you're waiting for QM setup here. Squeeze was happening here. That means this QM probably already missed you. You can maybe look for your setups based on some other confirmations and stuff like that. Okay. Find another different setup, because this is something that has been a miss. Okay. So find some other confirmations for your entries. So loads of different entries based on squeeze. You can see here, New York momentum box showing us squeeze. Price is gonna get rejected. For me personally, lower time frame, compounding accounts, this is good to use on a lower time frame when it comes to compounding accounts. When I do swings, I don't focus on squeeze that much, but on compounding account, lower time frames, in and out, this is a really good sign of rejection or continuation of price. Okay. When we have a few other things. Let me just go on lower time frame. Let me go on 5 minutes actually. Just a second, 5 minutes. This day today. By the way, squeeze here, squeeze here. What I wanted to say is we have also something called, a third confirmation is a crossover. So what is a crossover? Basically, a crossover is when momentum line is crossing over to the other side of RSI, okay? So crossovers are here. Crossovers are somewhere around here on the lower time frame, somewhere around here on the lower time frame. The thing about crossovers, they can't stand alone as squeeze and divergence. Squeeze and divergence can stand on their own as the good valid setups, but crossovers, they don't really hold that much power. The only thing that crossover is gonna tell you, crossover being here, is possibly, that's the same thing that it goes the same way as squeeze. They are possibly future POIs. If we have a momentum box that is future POI, if we have squeeze and crossover that are also future POIs, there is a higher probability of that being tapped in, okay? So there is a higher probability of this maybe working out. Hope you understand that. Let me go on a hard time frame to show you. Actually, it's easier than on 5 minutes. POIs that have crossovers, POIs that have crossovers here. POI with crossover, this is a valid supply and demand area. We have a crossover here. That means that in the future, this can be a valid POI too, if you understand that. Yeah, so if you have a crossover or squeeze, even though crossover is more accurate when it comes to future POIs, if you have crossovers and momentum boxes, those are two confirmations of a valid POI. Okay, let's not mention the sessions. So this is making it even more valid, supply and demand zone, and so on and so on. Trend line, second tab here. Let's not mention that. We're talking only about indicator here and what it's showing us. So indicator is showing us those three different things. Another thing that indicator is showing us, the fourth thing, is actually, everybody already knows, I believe everybody knows, is basically supply and demand levels. Okay, supply and demand levels here. What it's telling us, what this is telling us, let me just make it a bit larger. What this is telling us that when price is inside of supply and demand zones, of course, we can all understand that when price is inside of supply and demand zones, these are the levels when price is in. But we are not looking for reversals inside of these levels. We need for price to tap into it after it's already been inside of a supply and demand zone, if you understand what I'm trying to say. After price has been in demand zone over here, we need to wait for price to tap here and then take an entry. Okay, you need for price to tap and then take an entry. We do not look at this. Okay, we do not take a trade if it's only inside of a supply and demand zone. Okay, by the way, levels for supply and demand are 2010 and 8090. Okay, there is also a 50 level here showing you SNR, but you don't need to know that much in detail. Basically, if you see price going inside of demand level and then going out and tapping into it once, that's a good entry to take. Okay, once price has tapped into it, that's a good entry to take. For example, here price has tapped into price went inside of it. If this tap into it, I would probably take it. Okay, if price tapped into it again, I would probably take it. Price almost tapping into it, you can take it. For me personally, the best example is once price goes in, goes out, comes back, taps the demand level 20 here, and goes the other way. Same thing goes for supplies level. Once price is inside of it, we do not take it. We wait for price to tap into it. This didn't tap into it, but if one of them tap into it, I would maybe look for reversals. Okay, let me try to go on lower time frame. You can see it easier, so it's not much noise. Okay, here price went inside of it, price tapped it. We're looking for reversal. You can see the big difference. Lots of people are maybe looking for a sell when this is the true sell. Okay, because it tap into it. It's showing you rejections. Like I said, everything about sessions and everything about indicator is basically rejections. You just want to see those rejections. Price tap into it, but we don't have price going into demand level here. So maybe this wouldn't be a good buy. Of course, you can backtest this and maybe take a trade just based on tapping. It's up to you, really. You can take these trades. You can maybe take this, even though this was a better one. I personally like when price just taps into it, but first it needs to go inside of it, okay? I'm just, you understand what I'm trying to say with this, yeah? Doesn't, that's true. All indicators are lagging, even though you can kind of see it once you can see some of this stuff, you know what I mean? You can see when it bounces off. If you're taking, for me, example, when I'm looking at H4 time frame and I see squeeze on a higher time frame, once price has closed on lower time frame, or even on that same higher time frame, you will still see squeeze. You see? You understand what I'm trying to say? You will see squeeze on a lower time frame here sooner than you're gonna see it on a higher time frame. If you're sticking to H4 like I do, I just wait for a candle to close. Okay, that's still a good entry. Wait for a candle to close. You will see squeeze, and you will also have a candle close on H4. Plenty of time to see squeeze, plenty of time to take a trade. And remember, squeeze is a continuation entry. And yes, they are all lagging. They are falling behind by tiny minutes. I don't know, depends what time frame you're looking. They are all lagging, that's true. But if I see something like this, which I actually took, and this is what I actually took, if this is GJ. So if I see something like this, I see price giving me divergence, giving me crossovers, giving me squeeze on a lower time frame here. There is plenty enough time for me to take it, right? I don't need to take it exactly at this line, yeah? Second entry, I think this was Monday or something, and then this was Tuesday or Wednesday. I'm not sure. It was last week. Anyways, this is the second entry I got on GJ, and I saw the same thing. You see loads of how you say loads of rejections on the lower time frame. Here you see price giving you squeeze. This is a good entry to take. You can take this entry. You can maybe take something over here, something over here, up to you. I took it here. But after that, if you see squeeze, that's a good sign that price is gonna continue your way, right? It's only confirming you continuations. It's quite good. It's quite good if you know how to read it. Of course, it's gonna take you a while to understand the indicator and understand how to read it. But for me personally, I find it quite helpful. You can also see are you in supply and demand zones, which is quite good. Lots of people don't even know if this is supply or demand zone. People don't understand rally-based rally, drop-based drop. This is actually helping you a lot as a second confirmation next, so you don't have to guess it. Yeah. The thing I wanted to mention is when it comes to indicator on lower time frames, is that squeeze doesn't have to necessarily work on its own. For me personally, I told that loads of everybody actually, is that when you see a squeeze happening and you see a crossover, so we see a crossover here, and shortly after that, we follow it by squeeze. This is 5 minutes time frame, by the way. This is just confirming your trend is going this way, because price in squeeze is rejecting these levels. If it's rejecting these levels, it's confirming your entry. If you are to observe this on 1 hour time frame, even 5 minutes, if you are waiting, if you're a candle close trader, you wait for candles to close to take your trades. This is a very safe entry, okay? So for me personally, building up crossovers plus squeeze is giving you good entries, okay? So crossover, here, shortly followed by squeeze is two good setups built together as entry. Another thing is that you can definitely take volume divergence, RSI volume divergence with squeeze. That's another thing. You can definitely take volume divergence plus squeeze. I'm trying to find it, but I can't see it right now. Maybe this isn't it. Basically, if you see volume divergence, RSI volume divergence plus squeeze, that's another good setup. Or crossover plus squeeze is another good setup. It literally takes you 5 seconds to see this, so you don't have to be bothered with this. You don't focus on this. You don't have to focus on this. Just put it here. If you see it, you see it. Basically, it takes you 5 minutes to confirm the trend is going down. If I see a squeeze, okay, trend is going down. Okay, I saw there was a crossover before here, so this is shortly followed by squeeze. Probably trend is going to go down. Another squeeze here, price is probably going to go down. You understand what I'm trying to say? You're not going to look for your buys here. Why? There was a squeeze above it, right? People who were looking for buys here, there was no point. We just saw squeeze. Why would we see a rejection price and look for buys? It doesn't make sense. I'm playing against myself there, okay? Yeah? Okay, you understand what I'm trying to say? If you take crossovers plus squeeze, that's a good setup. If you take divergence plus squeeze, that's a good setup. All of those two setups together are working like magic. If you see divergence and squeeze, and you see crossovers shortly followed one after each other, those are all good setups to take, yeah? Let me see here. So we have this, well, not really, let me see. I don't know, maybe not sure, but we do have crossovers, tiny crossovers here. We do have squeeze follow shortly after. We kind of have squeeze almost here. This is all good examples of London close taking out New York peak. Yeah. See what I'm trying to explain here? The indicator is just confirming your trade, yeah? Indicator is also going to show you rejections in price. Indicator is going to show you, are you in supply and demand zones? Here, this lower time frame. So I'm just going to go on a higher time frame. See what I'm trying to say? Yeah. So it's showing you have 4 different setups. You have divergence, you have squeeze, you have crossovers, and you have supply and demand zones. All of them are good to work on their own, except maybe crossovers. You can take trades based on divergence, of course. People do that. Squeeze is amazing, and supply and demand zones are great. But if you wanna build it together, it's even better. For me personally, once I see divergence and squeeze, amazing. Once I see crossovers and squeeze, amazing. Once you see, usually you will see supply and demand zone being tapped by the second time, and then divergence, that's another good example. For example, if you see divergence without tapping into demand zone, maybe you should be careful, okay? You understand all that, yeah? By the way, divergence, let me make it better. Divergence, price tapping into supply, going into supply and demand zone, price tapping into it. Price showing you divergence, we have divergence plus tap into supply and demand zone. Maybe you can look for your setup here. If you maybe want to look for squeeze on the lower time frames, you probably can understand it's rejecting the price and giving you a continuation on squeeze. Yeah. Let me see the questions. When you say that, we wait for a setup in the middle. You can annotate. I don't see in the middle where it was. So for indicator history volume, indicator black line, momentum for indicator gray line, RSI. Yeah. So let me just show you. This is RSI, different numbers than what people usually use. This is momentum line. There is another RSI going over here. You can't see it because it's in white. There is another RSI going there. There is another RSI going like basically here. And there is also volume here. You can't see it because I made it white and transparency 0 basically, okay? You can see it, I only left these two important ones. But you will see on the indicator, you will see that it's giving you, let me clear this. The indicator will give you divergence. Sorry, the indicator RSI volume will give you divergence, while this normal RSI will not give you divergence. And this will give you divergence, okay? So you're gonna use this one. This is not showing you divergence. This is a different RSI, different numbers. This is what we need for rejection of price, okay? This is what we need to look at price action. We don't follow divergence by this black RSI. There's 2 more RSIs here that you can see. Yeah? But if you combine it all together, and I've been doing that before, I've been trading based on sessions and indicator, and it worked out quite good actually. If you know how to read it, it's quite good, okay? Just based on that. Of course, now with all that Em was talking about, you can definitely incorporate all of that and get good setups. Yeah. 1, 2, 3. Here, good setups here. Maybe I would wait for this, by the way, if anybody wants to wait for this. Maybe, I'm not sure. Okay, so there are good setups all around. Yeah. Let me go shoot some questions. then which is the momentum line is this line here. This one. It's just giving you momentum. It's similar to EMA. It's very similar, but it's on the indicator. Okay. It's higher in EMA. Okay. Momentum lines are common. You've probably seen it. MACD has momentum line, I believe. I don't know which other indicator has it, but lots of those oscillators or whatever they have momentum line. Yeah, it gives you more confidence. When I see something, when I saw this 2 trades on GJ, this was this and this. This one I closed here, actually here, and this one closed half, and then it kicked me out and break even, but it was all right because I closed half. But basically, these ones are just confirmations. The indicator is just confirmation for these 2 trades, nothing else but confirmation here. Okay. Oh, okay, you understand what I was trying to say here. Just confirmations, rejections in price, rejections in price. Look at the volume here. There is no volume here, especially no RSI volume. Low RSI volume. I mean, there probably won't be anything here. It's probably going to reject it. Another thing I wanted to mention is the anti-hostile or basically anti-divergence. When you see anti-divergence, and you'll see it quite a lot, that means that maybe you should be careful when you take a trade. If you see divergence on one side, damn it, why I can't? All right. If you see divergence on one side, and then you see divergence on the other side, just a second, here, kind of here, if I'm correct, if I see it quite good. All right, and then you see divergence on the opposite side. I don't know if it's an opposite side. Let's see. Not really. Not really, but basically if you saw it on the opposite side, you would probably presume that this trade is not going to continue moving higher. It's pretty normal, common thing. Anti-divergence is just one thing you need to keep mind on. But the thing with indicator is we don't focus on it. Like somebody mentioned in chat, it's lagging. It's all of them are lagging. There's nothing I can do about it. They're all lagging, but it's just a confirmation entry. Same thing with sessions and timings. It's just confirmation entries. We need to wait for a setup. You need to wait for a setup, nothing else. Okay. If you see these things on the indicator that are confirming your QMs here, confirming your QMs here, confirming SNRs here, and so on, that's quite good. But if you just base your trades on indicator, it's going to be very hard. Okay, just based on sessions, it's going to be very hard. That's why you need to implement this stuff together. Okay, this is just me looking at indicator. It takes you 5 seconds to look if price is getting rejected. It takes you 5 seconds to see if price is stepping into demand zone. You just have to look at it. Nothing else. Don't be lazy. Turn off the indicator. Look at, oh, it's rejection. It's rejection. Okay, maybe it's rejection. I'm gonna see. Maybe it gives me a crossover. Maybe it's gonna give me a squeeze somewhere around here, so I can look for continuation entry here. Yeah, this is H4, but you can still see here it's showing you rejection of momentum line. Maybe it's gonna continue moving up. I wouldn't really sell it here because it's showing me squeeze here. It's pretty simple. No need to puzzle what's going on, blah blah blah, and stuff like that. Just look at it and that's it. Yeah. Same thing when it comes here. When are you gonna buy? Maybe I'm gonna buy when price goes on a lower time frame into demand level, or maybe when I see divergence, or maybe when I see squeeze. Okay. Maybe there is a POI somewhere here during New York that was left unmitigated and needs to clear their liquidity out, and maybe there is squeeze is gonna happen tomorrow during this POI. That's gonna confirm it, that it's a valid POI, valid demand level. Yeah, but for now I don't see any setups. This was awesome. a miss, this was a good setup, this was a good setup. If you understand what we're trying to say, going on a H4 or 1 hour time frames, all you have to do is wait and then go full leverage. All you have to do is wait and go full leverage. No need to ping pong this, buy, sells, or whatever, okay? No need to go here and buy and you're not really sure, so you're gonna buy with 1%, 0.5. You're gonna see this, you're gonna see engulfing on a high time frame, you're gonna take this with full leverage. Same thing, you're gonna do this. You're gonna wait few days and you're gonna do it again because you've seen that setup and you backtested this same setup all over again, okay? If you backtested this setup for 1 month, 2 months, 100 of screenshots, this will point a picture in your head that you most certainly know this is engulfing candle, this is high, low, high, lower, low. It's probably, if it comes here, you're gonna take it. It has a valid trend line, it has squeeze showing me, that's all you need. You need 3, 4 setups. You took Asia high, that's another confirmation. But this was a valid full leverage sell, definitely one, okay?
Can you make me host?
Yeah, I'm talking too much, all right, there you go.
Okay, so.
By the way, if you have questions, just post that in chat, okay?
So I'm gonna wrap it up with basically how to use everything. Okay, we can all see my screen, right? Okay, so to simplify the entire process, since this is a lot of information, this is the system. So the first thing we need to look at is a BPE model, which is just breakout pullback entry, right? So we're gonna look at this on the higher time frame, like H4, daily, weekly, to give us our higher time frame direction. Okay, so breakout pullback, it's literally just breakout pullback. Okay, so it could be, it could be a trend, it could be like that, right? You have your breakout and then we're waiting for that pullback, and entry just means where entries normally would be, right? Like let's say it was some level of support and resistance. Inside this area, okay, inside of our area, we're gonna look for our confluence, trend lines, SNR levels. This is gonna give us direction. So if we see like this, for example, we see the trend line forming here, okay? This is indicating us the direction that the market wants to go in, okay? It doesn't have to, it could still trend up, okay? There's probabilities of that happening, but it's a lower probability. The fact that our higher time frame is showing us a breakout, pullback, and then we're looking for this area for that sell, okay? From there, we need to find our setups. Okay, so from the setups, using the 7 setup models, we need to identify them in confluence with the higher time frame direction. Okay, so once we have that, this area, okay, it could be this, if this was a QM, which it is, we could be looking for this area up here. Okay, we need to find our setup models. Okay, so in here or here, if we find our setup models, we can take them. Okay, after the setup, we're looking for our confirmation. Confirmation is your engulfing higher time frame, your trend line confluence with the setup, okay, not with the direction, with the setup. Okay, our timings and schematics, okay, this is timing and schematics, and our basing entry points. Sorry, I have schematics already right here. So our basing entry points or your indicators, okay, so your indicators, any of these as our confirmation for our entry. Okay, so after we have our direction, we have our confluence, we have our setups, we have our confirmations, okay, we have valid trade setups. Okay, after confirmations, we need to look for our roadblocks. Okay, we must be aware of the opposing setups in the opposing direction. Okay, this will give you targets to TP or to hedge. Okay. Somebody turn the music. Okay, invalidation. When the pattern becomes invalid, you got to cut the loss. Okay, something that you need to understand is accepting the risk, okay? Accepting the risk that you're in the trade for, right? So if your risk is from this high to this entry point like that, accept that, okay? Just understand this is my risk. If my risk is like this, I need to accept that. I'm not gonna just hold it up to here because I didn't accept that risk. Now I'm gambling, I'm in hopes, I'm praying that this is going to work out. I don't want that. I want to be understanding of the risk that I've set and comfortable with, okay? I'm comfortable with my risk. I'm not going to hold my trade past this high. Even if it runs in my direction, I'm comfortable with the risk of missing the trade. I'm comfortable with the risk of losing the trade, okay? And I'm comfortable with the risk running in my, with the trade running in my favor, even if I have to close out, okay? You need to understand to be comfortable with that risk and accepting of it. Okay, so once you have invalidation, cut your losses, get out of it, and move on. Okay, that's it. Just move on to the next setup. There will be another setup, I promise you. Okay, after invalidation, we have our tracking. Track every trade in either an Excel or trade software. You understand which setups are most profitable with. Okay, so you can use TraderSync, which I use, or you can use a compounding. I mean the spreadsheet. Okay, so whatever one works for you. And then planning, following a trade plan to compound your account. It should have specific pips and losses to maintain your accounts. Okay, so when you're trading, it's liberating. Having an exact plan of this is where I need to cut my loss, this is where I need to take profits, and this is what my next trade should look like with lot size. I don't need to think about it. It's right there. Okay, I know my lot sizes, I know my targets. I need to find setups that are able to meet these targets. Okay, so it'll make your life easier when you have a trade plan. You need that plan. Like if you're trading blind without it, you're never going to compound your account like that. Okay, you need to have a specific plan. Okay, and setups that fit that plan. Okay. That PDF that I just showed you is in the group. It's in the pinned messages, so you guys can look at that. Okay, so basically wrapping it all up. So if we have our setups and our timings and our cycles. Okay, if we have our weekly high, midweek reversal, yada yada, right here. Okay, so when we're looking at this, let's change the color. Well, let's say we have our type 1 bear schematic. Okay, stopping out all the sessions, then breaking out, then pulling back. Okay, let me, okay, so this would be our weekly, our Monday, Tuesday, Wednesday low of the week, Thursday, Friday, okay? So if we have this, and then this is our type 1 bear schematic, and then on top of that, we have our QM, okay, from this level, and then we have confirmations on the higher time frame to confirm this trade, and then we have our timings. Okay, this is how you put it all together. Okay, so we're taking the awareness of what's happening on the weekly basis, the awareness of what's happening during the sessions, the awareness of the timings, and then our setup models. Okay, so our setup models are here. And this is how you're going to catch these very, very high probability trades. Okay, so any questions, guys, that you guys want to ask, you can ask them now. Any questions that you had in the past, or if you wrote down anything that you wanted to ask. Let me look at the chat. PDFs will be sent today. Yes, today. I'm trying my best to get them to you guys today. Yeah, you're missing QMI.
What about volume profile? Somebody's asking.
Volume profile we used to use, it doesn't matter anymore. We don't use it anymore. It was something that we did use. It was kind of just a confluence thing. It doesn't really matter.
It's not bad, but it's just I don't know.
It's
It's
just,
all right.
it's just, you're just going to complicate more things than it's already complicated.
Yeah. You already have enough confirmations, I would say. So the 7 setups are SNR type 1, type 2. Yeah. You should be able to get, did everybody get session timings on TradingView? You just need to copy it in your Pine.
Yeah, you just got to copy the code that's in there into PineScript and save it.
I don't know about, my favorite setup would be QMC. I don't know about apps.
That's mine too, QMC.
Yeah, it's easier. I mean, it's easy to understand it, and it's the best one probably. To determine TP, you can go by a compounding plan, or what I usually go is just find another Asia sessions that haven't been left unmitigated. It's really up to you. I personally, it depends. If it's a compounding plan, you can just take 100 pips, 50 pips, 100 pips, and you're out, or you can just base it on sessions.
We don't give
Well,
it's about imbalances. Yeah, imbalance don't matter to us. Imbalance is just showing us direction, really. We don't use smart money concepts like that.
if the indicators doesn't, sorry, if the indicators doesn't work for the timings and for the indicator, just send me DM and I'll see what we can do. Okay, we'll try to make it work.
And TPing, I just keep TP at the next setup. So if there's a setup in the opposing direction, then I'm just going to TP there. But I'm also looking for setups. So if I'm looking for a setup and I have my compounding plan, and let's say my compounding plan or my target is 100 pips or my target is 50 pips, then I'm looking for an opposing setup 50 pips away from the setup that I'm trying to enter. If the opposing setup's 15 pips away, then I'm just not going to take the trade because it doesn't make sense. I need it to make sense. So if I have opposing direction of at least 50 pips from the next level where price could bounce from, then that's where I'm going to TP or hedge. So which time frame do you trade GC? What's GC? Are webinars Wednesday still a thing? No. We drop webinars every now and then, but it's not like this is just the boot camp. Gold. Oh, gold timeframes. I'm just on M15 with higher confirmation timeframe. Sometimes I can take a trade off H1 if I don't see anything on M15. It's really not, for me, it's not about the time frame that I'm trading on. It's about my targets. So if I have a target of 50 pips in an SL of 10 to 20 pips, then whatever time frame is going to present that opportunity to me, that's what I'm going to use. How many pairs do you think we should backtest? As many as you want. It's just a backtest, right? It's not live. But if you're trading live, for me, I only trade 2 pairs. If I see nothing on those 2 pairs, and it's been a while, like let's say it's been a week and I don't see anything on them, then I'll look at EU or GU. Or EU or GJ, sorry.
Maybe try guys focusing on GJ, GU, gold, stuff like that, Yeah, GJ is pretty good.
When determining direction, how do you use trend lines? It's very easy. It's literally.
It's just draw a trend line. If it took a session before, like I said, if it took session before, it's valid. If it took Asia low, Asia high, if it took Frankfurt high, Frankfurt low, or you can just draw it. Just draw a normal trend line, and after that, I'll give a Zoom a few weeks after about trend lines more in detail. But if you don't know how to use it, just draw it.
Yeah, it's very simple.
Yeah. It's pretty simple.
What is this trend here? It's just that. Just a right?
I'll give more details in next Zoom about trend lines, how to draw them and what to look for. But for now, if you only backtesting, it's still all right just to draw it. But you'll probably notice on your own. If you keep backtesting, you'll notice some tiny things about trend lines. You'll see there are few tiny things that matter when it comes to trend line.
Right. So yeah, I mean, clearly this is bearish, right? Like you can just see it's quick, like it's even respecting trend lines here. You know what I mean? So this is pretty much SNR. This isn't an entry I would have taken. I would wait for rejection of this break and retest, right? So we have a break, retest in confluence with trend line, but I'd be looking for a QMC pattern in this, right? Or an SNR 1 or 2 pattern in this to take a sub, because I already know we're rejecting. We have this confluence here, it's from H4, right? So I have my direction, breakout, pullback, entry, right? So I can just look for entries. Like I could look for a QMC to continue. Now we are touching the bottom of the trend. So for me right now, all the sells are now invalid. Like I'm not looking for anything on this pair right now, other than maybe a possible buy down here. Okay, because we've already tapped the bottom of the trend where it started here, here. So right now, it's not really a good, any good sell setups for me. Okay, maybe down to this level, you know, to get a trade here, but you know, where was the liquidity at all these highs, right? Like most people are thinking, oh, low resistance liquidity around order block here, right? And you get a little short bounce from order block, right? Short bounce here, but then you get wiped out. Okay, so everybody who is trading smart money, who's probably thinking, cool, we have a run on stops right here, right? Just because it's a run on stops doesn't mean it's a QM. Okay, QM has specific criteria to it with engulfing confirmations and whatnot. But right here, we have the run on stops, price trades into this OB, price runs up, people are expecting this high to be taken because we're in bullish structure, right? From here to here, this is all bullish. Price comes back down, taps up, taps in, and never runs the liquidity, right? It's because the structure is stronger. We have the trend line of breakouts to the downside, okay? Any other questions, guys?
Yeah, you'll probably be scared about using trend lines again.
And it's not the fact that the market doesn't know that you're drawing this trend line. Okay, we all know that. Like they don't know where support and resistance is. It's not that. It's the fact that it's a pattern. Okay, we have to understand that it's a pattern. It has nothing to do with the way you're drawing it. So just because I have my trend line, somebody could have their trend line like this. Somebody could have their trend line like, I don't know, like this or something. Okay, it doesn't matter. I'm just using my trend line to show my direction of where the market's going. And it's a pattern, right? So we have a trend line, we have a break and retest level. Okay, this happens over and over again. If you screenshot this, right, where you have your breakout pullback entry, you're going to see this happening a lot of the time. Like you're going to see this type of pattern playing out. Okay, and the fact that you have the trend line confluence now, right, from here to here, is just making it that much more of a pattern. It's not about the drawing. How did you come about with this? Just a lot of studying of really successful traders and what they've used. Okay. Yeah.
What's NGL? Cause NGL.
Not gonna lie.
Ah, okay.
Always gotta wait for engulfing. Always gotta wait for confirmation.
Yeah, there are different types of engulfing candles. I don't know. I'll post it. I think I got a picture somewhere. Different types of engulfing candles that will confirm your entry. But if you probably noticed that he goes from lower time frame to higher time frame, not the opposite way around. If you notice that, which is important.
How about ranging markets? Ranging markets are my favorite because you can compound quicker. Same setups, same confirmations, same everything.
I think it's easier when it's ranging when it's ranging basically.
Yeah. But
That's why we wait gold now. We wait gold because gold hasn't developed yet. So we're gonna wait for a compounding group.
Yeah. I mean, we've taken several trades on the compounding group. It's just, yeah, the market has just been trending. So it's really hard to find a lot of setups.
If indicator is showing, indicator is just, it's basically just a confirmation, same as other confirmation, same as timings and everything. It's just if indicator is showing you something else like squeeze, and you just took a sell and the indicator is showing you buy squeeze, it's just something maybe like maybe I shouldn't go full leverage. Maybe I'll take less risk, or maybe I should be careful when it comes here. I'll put it on break even. It comes to risk management, but just be careful if you see indicator showing you different things. Just know that it might kick you out.
Can I show us a sample trade? Yeah, sample trade is here. This happened today. Timings, okay. QM, drop. 65 pips, okay. Perfect entry. 1, 2, 3, QM. This
we're not looking for, when it comes to compounding, we are in and out. We're not looking for 50 billion pips. We're not looking for GJ 300 pips, you know, you're looking for 50, 100 pips top, and that's it.
The entry points this green line right here. We have the engulfing confirmation, right? So we have engulfing pattern. We have high, low, higher, high, lower, low, entry right here. Okay. 1 hour chart. Take the trade. You just take it. 1, 2, 3. Confluence. Entry point is always at the QM level or rally-based rally, right? If you're using SNR win. I don't have to. I mean, I can.
You can, but you don't have to. Yeah, you don't really have to. There is no need to complicate it with going an M5, because in the same way you can go on M1, you can go on seconds time frame if you want to overcomplicate it. But over refining or over refining things isn't. I wouldn't find it isn't profitable.
Let me explain why. So, like, let's say we have, you know, our engulfing like this, right? And we have a valid setup here. Okay, it's valid, right? Like this is valid, but let's say that happens and now you're waiting for this to happen. You're going in here and waiting for another QM pattern to happen.
Yeah.
Okay, like now you're just over refining it, and you're most likely going to miss the trade because you just are so focused on these tight SLs when it doesn't matter. You're going full leverage anyways, right? So what, you're not using an RR system, okay? So because you're going full leverage, you're going full margin, and you're risking 20% of your account. So it doesn't really even matter at that point. Okay, like I can just cut my loss if it's not going my way. I'll just cut it. Typically, I want to see the expansion move quickly because of my timings. My timings is going to give me the volatility that the market needs to push. Okay, that's why the timings are very important, because when you don't have the timings, and let's say this happens during Asian session, or you know, like a very slow session, you're going to be freaking out because you're not even waiting for your timings, and the market's just going to trade slowly through this. It's going to trade very, very slow, and you're going to be stuck in this consolidation. You're going to be impatient. You might close out. You might not know what to do next. But when you have the timings, you should see it enter and then quickly drop. I'm not saying you should never do anything in trading. I'm just saying, like, yeah, last night, market moved during Asian session. Like it literally moved like 200 pips, 300 pips on NASDAQ during Asian session. It moved like 70 pips during, you know, on gold during Asian session. I'm just saying the timings is a lot better Confluence if you want a very high quality setup. Okay, when you're not stressed, you have everything lined up, so you don't have any, you have no need to be worried about the trade at that point because you have everything lining up.
Big sessions, yeah. So patterns will work out. The timing is an indicator, is just a confluence. But patterns are there to take it from, okay? Of course, you're not gonna take it in Asia session and stuff like that. But timings are just confirmations. You don't, like I said, it doesn't have to be 9:30. It can be 8:45, 9. It can be 9:15, 9:20. I mean, you're not gonna wait for 9:30. You're not gonna wait for 9:00. Maybe you're gonna wait for 14:30 because that's pretty good. Like you can see it today on EU. But I'm joking. You don't wait for those times exactly, you know. You see a pattern, you trade it. Times will only confirm it. Squeeze and divergence will only confirm it. Yeah, and like he said, this isn't RRR system. So you know, if you had, let's say, if you go small account, $100 or whatever, with that smart money logic, it would probably take you 20 years to get to 5 figures. But this is different. You're over leveraging it on that one pattern. You obviously backtested a million times, and it works, and it has win rate higher than 80-90%, and you backtested it. You're gonna go full leverage. Me and Ev, we did accounts in. We flipped loads of accounts in 2 weeks, from 100 to 400 to 10Ks and stuff like that. We got loads of students. You got loads of students in the group. You can see they did exactly the same thing. They're just following the compound plan. You can't go that. I believe you can go that far with SMC on a lower accounts, smaller accounts, for people who don't have big accounts, people who don't have 100K accounts. You know, when are they gonna get 100K accounts if they keep doing smart money? Never. They're never gonna get anywhere with trading.
Right, and it's because of the fact that when you have those small accounts, those micro accounts, and you're trying to flip it. Hold on 1 second, guys. Okay.
Yeah, somebody said Shane. Yeah, it does. Gold is amazing example of SNRs. QMCs, amazing example. Round numbers on SNR are respected. I don't know why, but the algorithm likes to turn around those SNR round numbers. Backtest gold, it's quite good with these setups. All of these setups work quite good on gold.
Yeah.
Gold is different than Forex, definitely different.
And you know, like the fact that if you have a micro account, $100, and you're trying to risk 1 to 2%, like you're really not gonna make anything. Okay, like you're not going to. You may catch that like little tiny QM pattern in here, right? You may catch that, and you know it could run for a couple R, you know, 5 to 10 R, right? Even with a 1 pip SL, like you need to, if you're looking for 20 R, that's 20 pips. Okay, so it's really not that much. If you're risking 1% of your account's $1, you're making $20. Okay, on a 1 to 20. Does that make sense? Like you're not utilizing the leverage available to you. Okay, so we're taking advantage of the leverage, so it doesn't really matter for us for that lower time frame confirmation unless the SL is too big. If the SL is too big, you know, however big it would be, then I'll look for the lower time frame confirmation because it just makes sense. Otherwise, I'll run out my leverage and they'll just close me out of my trade on margin, right? I don't want that to happen, so I need to be aware of how big my SL is. But if I see, you know, an H1 and my SL is only going to be 10, 15 pips, like I'm going to take that. You know what I mean? I don't need to go and get fancy with it to sniper the entry. It doesn't matter to me. I care about profitable trades. I don't care about sniper entries. If sniper entries happen, then they happen, you know, and most of the time I get a sniper entry anyways. It doesn't really matter. You know, SMC logic versus this type of logic, you almost end up with the same result. Okay, you almost end up with the same result, except with this, you have a lot more clarity of why you're entering. Just because you have an OB doesn't mean the OB is a valid OB. You need to know what's going on, what created that OB, how was that OB created? Okay, and when you could zoom into the lower time frames, you can see the setups in there. If there's no setups in that OB, then there's no trade. Yeah, exactly. When in the timings, when the volatility kicks in, you'll know pretty quickly. Like most of your trades should run into profit pretty fast.
It's a momentum boxes. It's giving you momentum. It's giving you impulse. When it comes to those timings, it shows you an impulsive price action. If you want to go on a lower time frame, well, during intraday trading, you should definitely focus on timings a bit more. But on a higher time frame, setups, patterns are more important. If you are doing a 10K account challenge.
You mean like you're trying to grow to 100K, or you're talking about like an FTMO?
Yeah. Oh, FTMO.
FTMO, I don't do FTMOs anymore. Like I used to do FTMOs, but I don't see a point to anymore. You know, I just flip accounts. When you have a large account, and then you can just chill and wait on setups. You know, like I don't even like if I have a large account, I can risk 10-20% and make a healthy living off that. I don't need to go full margin when you have, you know, 150K account. You don't need to really go full margin anymore.
And the logic is, I mean, if you can flip $100 to 10K, why would you want to do FTMO? Yeah.
Yeah. I mean, FTMO is a different practice because you have all these rules, right? So you have news rules, you have holding rules, unless you have a swing account, and then you have drawdown. You know what I mean?
Payment is 1 month. You need to wait for payments. It's crazy.
But I mean, yeah, you can just do the FTMO account. You just lower your risk, because with FTMO, you're going to have to lower your risk percentage. You're not going to be able to do the full leverage thing. You're not going to be able to do the high 20% thing unless you're scalping. Okay, like if you're scalping, then you can go high lot sizes and cut your losses extremely quickly. It's just, for me, it's just not something that I partake in. I've passed 3 FTMO challenges and they just sit there. I don't even use them.
Yeah, me personally, I use Fivers for swing strategy and I hold it for a bit longer, but I mostly focus on flipping. It's easier, better, funnier.
Yeah.
It's much funnier. But yeah, I've has FTMOs and I got Fivers, but this is definitely cooler.
Yeah. Because I mean, if you're flipping an
The risk is
account,
lower, yeah.
yeah, if you're flipping an account, you're risking like what, 50, $100, however much you want to start with.
Yeah.
You know, and you're just compounding it with a compounding plan. And if you lose the account,
And
you're
it's
only losing $100, $50.
and it's less times, you know. You can flip accounts with compounding plans you have in 4D. You can flip accounts you can get to 10K in 10 days. And it will take you 30 to pass FTMO.
Yeah. We had a student recently just hit the 100K mark from $50, which
Yeah.
is pretty crazy.
With 50, yeah? I think
Yeah.
it started at 50. Yeah, we got people that are to 10K, people got to 7K, 5K. There's loads of them. Ask them. Yeah, there's loads of them who did good results. And that's all with $100, $50, $100.
I'm not sure. It was literally,
You can't get rich risking 0.25, 0.5. You won't get anywhere.
yeah, like he's been studying. I mean, I asked him, I was like, you know, like, have you ever done this type of flip before? He's like, I've taken like, you know, $500 account to like 2,000, 3,000. But he said he's never taken a $50 account to 100K. And he did that after 4D. So
Yeah.
and that's better than me. Like I haven't done a $50 flip like that. I usually start 100, 200. You know,
Yeah.
so a lot of my students actually become better than me, which is great.
We
You know?
didn't get into six figures. It's very rough when you go to 20, 30K and risking 60%. It gets mentally very, very tough. It's not even fun.
Yeah.
It's not fun at all.
I usually flip from 100 to 3 to 5K and then cash out.
I just want freedom. Who doesn't?
Broker depends on where you're from. I'm from the US, so I have to use offshore brokers. I use Prosperity.
But like I said, if you're really interested in compounding, focus on gold. Like Shane said, it respects SNRs, QMCs a lot. Focus on gold. Gold will make you rich. I mean, of course, it can kill you, but it will make you rich if you know what you're doing. If you know what you need to look out in the market. From what years should we focus on gold? How do you mean? From what years? Oh, like that. Well, I mean, I usually start 2021. You don't, I mean, me personally, I never go that far. Markets keep changing, and I never go that far. You know, I would rather backtest last month more times than backtesting January last year, you know, till now. Last week, I just backtested all pairs in December, nothing else. And then I would backtest it again and backtest it again. It's cool if you have soft FX, yeah? Is it that? Soft FX or manual backtesting trader on a C trader, and that way you can enter the trades actually and risk manage it. Yeah, soft FX is much different than trading view backtesting, much different, because you actually enter in the trade, which is better.
So just one more example, like let's say I have this QM. This would be like my next entry point, right? If I want to stack my positions, because this would be an SNR2. Okay, so we have that QM. You see how we have trend line. Okay, so the trend line is just the confluence, right? And the setup is here. Okay, so we should see engulfings here and here. Okay, and that's how you stack entries, if you guys ever wonder. Now you can layer entries too, so that you can take advantage of the leverage. So, you know, like if you have a, I don't know, $500 account and you're trading NAS that lets you take 0.05, you can stack the entries, because if you take 0.05 and you hit margin, it's just going to close you out of the entire position. But if you have layered entries in there, or just multiple positions at the same price, it'll maybe close out one if you're going into drawdown and keep the other position.
I may have missed this earlier because there was a time where I had to step away from the call. But when you guys are identifying your SNR levels, I know you said you could use candlesticks or line chart. I've heard it's best to use the line chart. Do you guys look for like sharp A's and V's, or how do you guys identify your SNR? Sorry if
SNR is just, so it's wherever we have, yeah, it's like a, I guess you could say A or V patterns. I use the line chart and the candlestick chart at the same time, because there could be situations where you have a like a QM level, right? I'm trying to find one. Like for example, like if I have my QM level here, right? I don't know on the line chart if this was a wick or not, which would make this not a QM anymore. because it needs to make a lower low. So I'd have to go back and switch into my candles to make sure that that didn't happen. Okay.
Okay.
Yeah. So right here, this was a valid QM level, but I wouldn't take it like this entry, even though it played out from here, right? Where you have this level like that, right? You have your QM, price comes into it and just rallies. I don't play it like that because I'm looking for something towards this level down here. Like this is in the middle of the range. So for me, it's higher risk, even though it played out. Okay, for me, it's just higher risk. What about the direction between higher time frame and lower time frame? Example, we see bearish direction on M5 and bullish direction on M15 in the same time. What about direction between higher time frame and lower time frame? Example, we see a bearish direction on M5 and bullish direction on M15. It just means that the M5 is pulling back towards an M15 level. I'm not really sure on that question. Drew McKinnon, flipping the trading view chart if I am better at a defense. Yeah, why not? Can you show some recent trade setups you took? I just showed you this one. Showed you this one. I showed you
Go on Aussie dollar. I can annotate easily. I think there was. Can you go on H4? Let me just show you some setups I took. Wait. Give me 2 seconds. Let me just look at my C-Trader. All right. There, and there. What the fuck? Oh, okay. Yeah. I took this one. I think I posted in a group. And I took this one. And I missed this one. Can you see my annotations? You can see it, yeah?
Yeah.
Right. These are the setups I took. Cleared it up here. One like this. Obviously this downtrend doesn't make any sense. So this is invalid trend line, but her third tap was here. So this is confirming me this direction. And there was also QM with engulfing here, showing me this is a good sell. Same thing goes here. You could have taken it here, but it's only 2 touches. Third touch was here. This is also SNRs, and you have QM. Let me just mark engulfing, and you have QM here. You got a high, a low, higher high, price drops down, lower low, comes back, and it exploded down. I exited somewhere around here because this was on a compounding account. So I only was looking for this big boom to the downside, and that's what I got. I missed this, but you can see on H4, plenty of setups here just on H4. If you go on a lower time frame, you will see this much easier. But there are, this is the one I missed. I think something happened during Asia session. I'm not sure. You can see the times here, and his times are different than mine, but this is what I missed. But also there were loads of other confirmations like trend lines and indicator and timings here. I can't see it here, but you can see just by looking at it like this, it's quite good. Just based on Aussie dollar, there are 3 different setups. If you only wait, if you are very patient and you just wait, you could have taken this, you could have waited for this to form, and you could have waited for this to form. You just have to be patient. While this is happening, there is no need to take any trade. You need to see these strong engulfing candles. strong engulfing candles, engulfing candle here, and then you can take a trade. Remember, that's really important to see engulfing candles, momentum pushes, impulsive price action, then you can take a trade. They are probably bouncing, they're pushing price up, down, they're pushing price down, pushing price down, pushing price up. Rejecting these institutional levels, if you want to call it like that, that's your signs of entries. Signs of entries. Consolidation, taking out liquidity, going down, coming back, rejecting the institutional levels, going down again. And now that you understand that, all you need to have is trend lines that don't work and trend lines that work. You need to have timings and you need to have indicator.
Let's see.
I think there was a, I mean, they can
typically play
show you G-band.
like
Oh yeah, that's,
these in here I've taken, so
yeah.
these are all purple is just the entries. You know, so I've taken those, taken this buy, taken this sell, missed this sell, took this sell while Ivan was talking, and then I played EU, showed you that one from here, So I took this, the engulfing here, took it from here, dropped. Yeah, that's about it for this week at least.
What I wanted to say is that, for example, when I do my own backtesting, and I think that is something you can guys focus on. When I do backtesting, like for example, if I did backtesting last month of GU, whatever, or gold, let's say, and my win rate wasn't 80% or higher, then I'll do it again, and I'll do it again, and I'll do it again, and guess until I get 80% or higher while I'm backtesting on all pairs, GU, GJ, gold, and so on and so on. Don't satisfy yourself with 20, 30, 40% win rates. Shoot higher than that.
H4 is my higher time frame. I don't see confirmation on H4, then I'll look on daily. But I always go to M15. So M15, I confirm with H1, H2, H4. I just need to see my engulfing pattern. All right, guys, I think we're running on close to 3 hours on this, or 2.5 hours on this call. So any questions, just ask them in the group, and
we'll do more Zooms later on, maybe next week or something about that, because I want to show you something about trend lines and stuff like that. So don't worry, guys.
all right, guys, I'm gonna wrap up the call.
All right.
I'm gonna try to get the PDFs to you guys today. So just look for oh yeah, definitely if you want the PDF, please DM me your first, last name and your email address, and make sure that you've signed the NDA to receive the recordings and the PDFs. All right.
All right, guys.